We take a look right now at China. Stocks there continue to fall. We're keeping an eye since it could affect, obviously, markets around the world. Andy Cinco has that story for us from the markets desk. Andy.
Yes, Deirdre, a tough week in China. Stocks there fell about 6.5%. That would be their worst week in 6 months. And as you mentioned, Deirdre, we are keeping an eye on this because China is a leading indicator for the rest of the world. Those stocks bottomed first and turned well before Europe or America. And so when they're slipping and sliding, we've got perhaps a problem down the road. Let's also update you on the technicals that we talked about yesterday, and that Chinese stocks are perhaps forming a double top. The key level to watch is 31.74, and for 2 days running, Chinese stocks have been below that level both on an intraday and a closing basis. And again, what makes a double top perhaps a real problem is that they had a very good run. They fell back. Investors tried to bid it up to a new high, but it failed. So we now are looking at perhaps a change in trend. And Marianne Bartels at Bank of America Merrill Lynch is the one who's keeping her eye on that 31.74 level. I think it may take until next week until we get a clear direction as to where Chinese stocks are going, because it is such a volatile market. Let's just tell you what Chinese stocks are closely correlated to. It is both U.S. stocks, it is oil, it is copper, it is soybeans, it is the U.S. dollar. So as Chinese stocks go, perhaps everything else goes. And a different market entirely. We're talking about mortgages now with Adam Johnson, who's looked at a couple of REITs where dividends are actually rising. Is a safe play, perhaps.
Yeah. Strange as it sounds, Andy, you wouldn't think that companies right in the heart of the eye of the storm, as it were, would be having difficulty or would be making money, but they are. We ran a screen, looked for companies that have been increasing their dividends, and guess what? The mortgage REITs have been doing exactly that. They've raised their dividends, 5 of them in the past year. As a group, these 5 stocks are paying an average dividend of about 14%, and they're up 19% year to date. The names, by the way, Anworth, Capstead, Chimera, Dynex, and Hatteras. So how do dividends rise as foreclosures are rising? Well, it's very simple. It's called a government guarantee. We spoke to Merrill Ross over at BGB Securities. She said that these companies are effectively investing 80 to 100% of their money in government-backed assets. What does it do? It enables them to effectively get guaranteed cash flows and leverage it 6 to 1. That's how they're doing it. Eric, it's not quite what you'd expect. It's a bit of a surprise, but that's what we have down here on the markets desk.